Good morning, everyone. It's Jared here from the Alpha Capital Group to give us a quick weekly recap for the week that has just passed. So just before I start, we are proud to say that we are launching our brand new dashboard later today, all going well with no technical glitches, and our free competition will also begin as well. So if you haven't registered, please do. There is some great prizes for the winners. So we have got top 3 prizes, and we also have some spot prizes as well. So make sure you get entered either way. Okay, it's going to be a very good month ahead. I suppose if we take a quick review over the week gone by, I suppose looking at the key events, again this week, as we said at the beginning, wasn't going to be a massive amount of data. The big focal points was the release of the US growth forecast at the beginning of the week, which did see growth forecasts be revised lower, and the expectation of future forecasts will also be revised lower as well, with the inflation outlook, with the rising yields, with everything that we mentioned and discussed in Monday's call. Now, FOMC minutes did come out on Wednesday, which again gave some more impetus into the bond buying program by the Fed. Obviously, the cutback in that, the reduction in it. If you haven't read it, it's definitely worth paying attention to, because that will very much be a focal point again in the next Fed meeting in May as well. So definitely worth taking a peek at that, taking a look at the wider minutes to review. Other than that, really not much else. We had a lot of volatility, I suppose, at the beginning of the week, where we saw the equity markets, the indices sold off. We saw the dollar continue to kind of ramp higher through the price action. And we're seeing that, I suppose, for the early part of the week, Monday, Tuesday, Wednesday, we saw that risk-off narrative play into consideration. We are seeing a little bit of a bounce in the indices this morning. We're seeing it in the European markets with the DAX and the Euro stocks and the FTSE. And we're also seeing it in the US markets now, which we'll be looking at very shortly. So I suppose the big focal point is how high does the indices close today in the stock markets to, I suppose, pare back some of those earlier weekly losses from, I suppose, Monday and Tuesday, more broadly speaking. So next Monday, we will be doing another recap for the video ahead. But until then, let's take a quick look at the price actions. So we can see here the NASDAQ had that massive heavy sell-off from that key level we've looked at from around about 15,300. We saw that sharp decline through the course of the week, Tuesday, Wednesday, saw Thursday largely consolidate with that up spike into the close. So if we look at the lower time frames, this is atypical of what you would expect with smart money concepts. We have seen how the price actions consolidated. We got the hunt to the downside through 14,400. Price actions rallied back, and now we've actually taken out the highs up here. So from my perspective now, it'll be interesting to see, do we get a relief move to the downside, final push to test this level, given that we've had a very quick turnaround with the SMC structures, and looking for the impulses higher accordingly to kind of pull back some of these levels. Now, second to that, if the price action holds above this region here around 14,600, the likelihood of a pullback into this region would probably be somewhat diminished, and we will see probably further upside from this region here. So worth keeping an eye on the price action there in the NASDAQ. Some interesting structures. We can see how the price action has sold off very heavily, but over the course of the daily price action, if we look at Friday, we're seeing that little bit of a bounce. Thursday, weak rejections. Wednesday and Tuesday, sharp sell-offs after a nice move on Monday. So I suppose this is where we open the week here at around about 14,855. It will be very interesting to see, does the price action get into some of these regions up here today. Now, of course, still very early days, as we tend to see the volatility is more prime during Tuesday, Wednesday, Thursday. So of course, just make sure your risk is synchronized with your trading plan accordingly. Other than that, really not too much to report on the NASDAQ. On the S&Ps, we're seeing very similar structure. We had that breach through the key level here from February, as we alluded to on beginning of the week. We had the initial pop. I suppose when we look at the price action through the course of this week, there's some very interesting concepts when we look at it. We had that consolidation. Initially, we had a brief spike lower. We had the spike to the upside, taking out any of the sell side positions on the initial sell-off. All of these were wiped out. You probably even got some buy orders triggered as well, just around 4,600. But of course, look what's happened. The price action has simply rolled over back into this region. We came back into the floating 800 EMA on the hourly, and the price action had briefly broken through these lows, but we have seen a significant bounce pre-market this morning and into last night's close. where the price action is pulled back into this 4,500 level. So I suppose if you're looking at this now, similar to the NASDAQ, we kind of have this consolidated structure. We kind of have to see this consolidated structure. It'll be worth now watching to see, do we get a relief rally back into this for maybe one last push to the upside into this region? That's what I'm looking at personally. If it doesn't play out, well, look, it's a case of just watching the price action as it ascends and looking for selling structures potentially on the upside if that's what your strategy is. So it's all about, are you counter trend? Are you smart money? Are you trend trader? Are you higher time frames? Are you lower time frames? It all comes back to realistically what your trading plan is, trading around that plan and articulating a clear exit strategy as well. Finally, Dow Jones, similar scenario. So here again, we came back to test the consolidation from last week. Price action had initial hunt through that level here, just above 34,300. We can even see it here on the hourly. Consolidation yesterday, false spike, price actions broken through, and now we're ascending higher. At this point in time, it does look unlikely whether we're going to get the pullbacks, but of course, watching to see if that does play out accordingly. But as we look at the price action here, again, very, very similar scenario on Monday. We consolidation, we had a brief pop to the downside, we popped back to the upside, and then the price action simply just completely dove off. So there is still a lot of unmitigation up here. So I'll be watching this region with interest around the 35 handle personally. And of course, it all comes down to the structures that you're obviously identifying within your own trading plan. Last but not least, I suppose on gold and oil, gold is still moving sideways, not really a whole lot happening over the last week or so, despite a lot of reports signaling there's been record buying in gold bullion, which is obviously simulating to me that this asset is heavily manipulated at the moment, because if there's massive buying coming through in the markets, well, surely we would be seeing gold rally off the back of that data. But by the liquidity providers, by the market makers, we're not seeing that play out through in a fair and coherent manner. We're seeing the price action still move fairly stagnant sideways between 1920 and I suppose, or 1945 and 1915 into 1920. So that's where the price action is there. Oil did move lower on Wednesday evening due to the EIA reports. And there was, I think there was developments in Yemen as well, which saw the oil prices tank marginally. But of course, since the price action, we are continuing to see this lower high structure rejection over here. We're seeing lower highs again, and the price action is grinding lower. Now, of course, the gap close that we've talked about for several weeks now from the end of February is still yet to close. We have got another wick into this region where the price action has bounced. So worth keeping an eye on that. But of course, when you look at the price action, broadly speaking, every bit of low gets a little bit of a relief rally, and then we get further selling induced. So definitely illustrating that the price action at the moment is very much tilted to the downside, but the nearer handle at the moment is definitely between this $92 and $94 price point. The most recent lower highs at 103.50 gave way very, very quickly, which now puts us back firmly underneath the $100 benchmark and even slightly below that at even $98. But other than that, really not too much else to report. So I suppose it'll be all eyes on the price action into the weekend to see kind of where the weekly closures are. On Monday, we will obviously take a kind of a brief look at the yields again. We'll look at the dollar. We'll bring all that back in after identifying the weekly close this week as well. All right. Have a great weekend, everyone, and we'll see you all on Monday.